Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, July the 28th. The year's 2025. Let's talk trading, weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. As always, have your risk management in place so you never lose more than you're willing to lose on any one single trade or during any one single trading session. So if we take a look at the weekly, we see the dashboard shows all open gaps have been filled so far. And right now we're about 6 pips below the weekly open, 33 off the high and 17 off the low. We zoom out to the month. We are 304 pips below the monthly open for the pound, 370 off the high and 54 off the low. Notice we are in the lower wick zone of the previous month. We're putting in the opening range for the week, and we are well below the opening range for the month by 284 pips. And for the year, we're well above it by 880 pips. Wow, that was off the chart. Speaking about the year, we are 909 pips above the yearly open. We are 369 off the yearly high, and we are 1320 off the yearly low. We had an inside bar 7 days ago, and we are back inside of that range with the high breakout point being at 134.23. So we've been crisscrossing that level because the open was at 134.25. So that psychological line is crisscrossing it at the moment. Only 50 pips of range. We can see there's looks like about 8 other pairs that have bigger range, with the pound Australian leading the pack at 180 pips. Notice the pound yen's only at 88. And for some reason, the pound dollar is only at 50 pips. So I'm not sure why. One thing to note, if you look across here at the dollar, you can see all these lower wicks with this one exception. So price has been pushing up from this area. So it wouldn't surprise me if we got a push this week. I could be mistaken. Remember, these videos are for educational purposes only. And if we look at the buy zone here, you can see we've crisscrossed this weekly open. I talked to Walmart a little earlier, and when I first brought up my chart, I noticed that the price was it dropped down to right around 34.23, and then it bounced, and now it's pulling back. So for the rats, the range is too low, so you probably really don't want to be trading using the rat as your main trading method for today. Bambino flex indicator pointed down, price near pivot was a short. You can see we got near the pivot, didn't quite reach it, and it's fallen short since then. And let's see, it's almost 8 o'clock my time, and this candle starts at 6 o'clock my time. And that's one of the ones that Walmart's really been talking about, is the H4, how it usually likes to go one way and then come back another way. And as you can see here, we missed that pivot by 1 pip. Let's see for the week. So far, we've missed it. And for the month, we've taken it out. Okay, in and out of the previous trading sessions, or Friday's uh, lower wick zone here. You can see where we opened, out, came back, out, in and out. And so you can see here out of the last 60 days, price has been out of the closed outside of the wick zone 75% of the time. I do believe that's days. Let me just double check something. It's been a while since I've run that. Yeah, 75% of the time. Time frames. So you can see we're coming right back to that weekly open. So last week we had a 187 pip weekly range. That was at the 50 percentile. Right now we're only at 50 pips. So let's see, we have not broken out of the previous high. We have not broken out. Or did we break out of the previous low? No, we have not. Missed it by 2 pips. High minus close, 28. Close minus low, 22. Weekly crossover traders, 27 to the upside, 23 to the downside. So just trading that weekly open could have bagged some pips, and you've got that opportunity again right now. This looks like a return bar. This also looks like a return bar. And you can see price has been ranging. First it's ranged here, then it's been ranging here, then it exceeded that range to the downside here, then it exceeded that range to the upside here. That's one of the things I've been noticing about the pound. It'll range, and then it'll exceed both ranges, and then it'll establish a new range. And so once you look at these edges, as Walmart likes to call them, I just look at at these wicks. You can see here this huge outside bar on M30, and that was a 27 pip range there. You can see right here, this level right here was definitely one that once it breached it and then came back, it provided a nice profit. And then you can see here the same thing happened. You look to the left and you see nothing but red. Good indication, broke through, started coming back down. And if I'm not mistaken, that was the current H4 right here. So 37 was the open. It got up to 39, reversed, and just came all the way back down to 09. So there was a potential 30 pip. You could have captured that. And so now looking at the 3-level ZZ indicator with the fibs, main thing I like to look at is the lowest high, highest low. And right here, we had that lowest high. You see it came down, crossed it a bunch of times, made a nice cross here, and you could bag 5 pips. And if I was taking that trade, if I was in that trade, I would get out right here. Thing is, because I see that one ball, I just like to take the money off the table. But as you just see, one ball sometimes become 2 balls, and I like to stay in 2 balls because then they usually move. And that just showed what happens. And this is why you have to sometimes just take the profit before the market takes it back. So once again, I said I would have been out at the one ball. And so right now, I would have pretty much been happy. Now, the thing is, would I want to re-enter? No, not my signal. No. And that's something to learn. Is that just take what I used to always call the smash and grab, you the burglar, runs down, goes down the street, sees the jewelry store window, he smashes it, he takes a couple diamond necklaces or rings, and then runs like crazy before the cops get there. Because if he sits there and tries to load up his bag, every second is 1 second, that the cops could be coming. So it's pretty much the way to trade if you're trading intraday. Sometimes you might want to stick in the trade, but usually, especially when you see something, when you have history and telling you to get out. So when price came down here, put in that one ball at the same level, that's saying, you know what, this is a bounce point. It could continue, and it did for a few pips. But it's just, for me, it's just better to bounce out of those trades. And looking here, another thing I've learned. So right here, you've got a flip-flop box, white to black. And you see what happens if you would have taken that trade. It came all the way down here, then came back up, and then came all the way back down. Now, chances are you'd pop out with a couple of pips. But the thing to note is, when you look at price here, you see here, it gave you some opportunities. But using indicator 2, which is the EMA 5, it's just that with the colors, if price closed above or below it. It's like you almost need to have that first dot to have a chance. And you can see here, even then, if you did that, there was still some time where it was going against you. But you can see here, it wasn't making really higher highs, then it started making lower highs. It made a higher high here, but not compared to there. And then it just kept going down. So right here, the same thing happened. Now, once again, from the previous chart right here, you would have been out. But you can see here, it's still making lower highs. So if you're wanting to stay in the trade, you need something to tell you to stay in the trade. And indicator 2 does a really good job. And I really swear I wish I could find that article from, I'm talking 1980s, if I remember correctly. That there was a study, somebody did a study on all the moving averages, and they said that the EMA 5 was the best. So I just adopted it, called it indicator 2, and it just seemed to have stood the test of time. So, fellow traders, I'm glad you're back. I hope everybody had a fun and safe weekend, successful weekend, and hope you're enjoying your summer. And when you come back to trading, I always want you to remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.